Welcome back to Countdown. I'm Mark Barton.
And I'm Anna Edwards. It is 7:18 here in London. Let's take a look at how the markets have digested the ECB rate decision this week. And this week's other news, we're joined now by Sturgeon Capital Portfolio Manager Yannick Naud. Yannick, thank you very much for coming in. Let's talk about the impact of the ECB's decision to do nothing yesterday on your investment strategy, because you say that one of the reasons you've liked Eurozone stocks is because you think that the ECB is about to turn Japanese, if you like, and do something that's a bit QE-like. They haven't yet.
Yeah, if we look at 2013, the best performing stock market were the stock market where, in fact, the central bank was having the most monetary, the most easing monetary system. And we were thinking, I was in a belief that the ECB could be this year one of the most accommodative central bank as the Bank of Japan, keeping in mind that there's tapering in States and in the UK, there's probably going to be some tightening as well. Having said that, we didn't see so far the evidence of it because there is no movement of interest rate. There have been talk of quantitative easing, which did not happen. There is still some chance of having some other action from the ECB, but so far we didn't see anything.
But too early for you to change that preference that you have for Eurozone companies?
Well, all in all, the Eurozone so far is seen as a safe haven. So when you have a lot of volatility in emerging market, we see a lot of inflow going out of emerging market into developed market, but in fact a lot into the Eurozone. So all in all, being a safe haven is not a bad place to be. The problem with that is you could be in a situation like in Switzerland back 2 years ago, where you have such an inflow of money that the currency becomes too expensive.
But at what point are we nearing that level? 137, Draghi did signal that the currency was becoming a concern.
Well, I was thinking that 138 or above 138, we're well into this territory. I think. If we look at the earnings of a European company in the last few months, all companies are facing quite a dramatic headwind in terms of the strength of the currency and how it makes them difficult to export. So I'm thinking that it's probably we're well into this territory already.
And the euro hasn't even been affected by events in Ukraine, but Russian assets have. Time to buy Russian assets. Well, Yannick, what do you think?
Well, it's a big question. If you look at valuation in terms of earnings, the valuation are quite reasonable compared to other emerging markets or compared to developed markets. All in all, it's a binary position if you think there will be very strong sanction against Russia or if there will not be. If the worst case scenario would be a crippling sanction like we have seen in, for example, in Iran, and that will really make export and consumer confidence and confidence of company much weaker in Russia. If we don't see that, it might be a good opportunity.
Yannick, thank you. Yannick now stays with us. More on his investment strategy when we return.